Markets struggled for a bit after a negative GDP print and weaker than expected job growth. Are we headed for a slowdown or just shaking off some dust? Meanwhile, big tech keeps flexing with massive earning beats that defy the macro mood. In this episode, we're breaking down the Q1 economic data, previewing the key events still ahead this week, and checking in on the latest developments in the ongoing trade war. Plus, we've got a fresh look at the upcoming earnings slate and what it means for your trades. If you're into market insights without the fluff, make sure to like this video and subscribe to the channel. Follow us wherever you get your podcasts. Now, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play, or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Happy Wednesday. It is April 30th, the last day of the month before we head into May. And folks, we had a very interesting day in the markets. So we started off the day a bit bearish, I would say. We had some economic data that we're going to dive into here in a second. And starting out the gate, things did not look fabulous. But as luck would have it, the bulls stepped in and recovered. Take a look at this from Yahoo Finance. Stock market today. Dow, S&P 500, NASDAQ come back from steep lows after GDP print to cap turbulent April. U.S. stocks recovered from steep early session Wednesday as Wall Street capped a volatile month and investors digested a deluge of economic data led by the first contraction of the U.S. economy in 3 years. That doesn't sound great. The benchmark S&P 500 rose more than 0.1% after an early drop of more than 2%, while the tech-heavy NASDAQ recovered from a similar situation. The Dow Jones climbed more than 0.3% to extend its longest win streak of 2025. Markets wrapped up a tumultuous April that saw stocks whipsawed by President Trump's tariff policy and recent upbeat stance on negotiations. So it was an interesting day. I mean, if we just take a look at the heat map, considering the fact that we opened, right around down 2%, I'm loving the heat map based off that. We had a very nice recovery, and there are a few reasons for that. First of all, let's take a look at SPY. We continue to raise off of the lows that we had at 481, which looks great. We're coming up to the 50-day moving average, which, makes me a bit nervous. Are we going to tap it and roll over? This is just one gigantic bull trap, or is this a genuine recovery? Right now, the market is showing a lot of resilience, and it's very interesting to me. Let's take a look at the Qs, right? The NASDAQ 100, the heavy tech ETF. And this is coming up right to the 50-day moving average. So this too is right there. We'll see what we do. But so far, we just continue to climb. And again, I mean, we opened up down, something like 2%. And part of the reason that happened, GDP for Q1 came in not that great. We're seeing some contraction. This was an interesting point. According to CNBC, imports soared 41.3%, driven by a 50.9% increase in goods. Imports subtract from GDP. So the contraction in growth may not be viewed as negatively given the potential for the trend to reverse. So, some things that I had been hearing this morning after that negative GDP report was very simply that the negative GDP, the contraction, was just simply due to all these companies going heavy on imports, trying to front run so to speak, the tariffs that are, soon to be coming. And another interesting thing that I also heard and saw this morning was the fact that, you would assume with the negative GDP report and the overall equities markets down to start the day and pre-market and initially after the bell, you would assume you would see a rally in bonds. You would assume that you would see yields for bonds drop off severely, but we didn't see that, right? So we had kind of a divergence, I guess you could say, of what you would typically see. Typically, if the market is getting beat up, you would expect money flocking to bonds and seeing bonds, on the rally. But we did not see that this morning, which, to me kind of signaled, hey, this drop might be temporary. And, sure enough, it was. Something else that was really driving the markets down initially this morning was ADP jobs report for April. So according to CNBC, private payroll growth slowed to 62,000 in April, well below expectations. That's not great. Private sector payrolls rose by just 62,000 for the month, the smallest gain since July 2024, down from 147,000 in March and missing the Dow Jones consensus estimate for an increase of 120,000. So literally half of what was expected for the month came out. So that's also not great. So you got that going on. You had GDP not great. Leisure and hospitality posted the biggest gain, adding 27,000 jobs. Others that showed increases include trade, transportation, and utilities. So it wasn't a good number. It wasn't a good number at all. You also had PCE that came out. And if I'm not mistaken, I think that was about as expected. But really, I think what the focus this morning was that GDP number, right? It wasn't good. So you had a couple whammies right out the gate for the bears as far as just, negative economic data. We talked about how these were going to be key events back on Sunday as we previewed the week. And so, initially, the markets opened pretty red. I mean, you can see this wick here on the Qs for those on YouTube for the day. We got as low as 461. So we were down pretty big. And then things started to turn around. And one of the interesting things that I saw came from this Yahoo Finance article here. Stocks climbed out of session lows after a Chinese social media account affiliated with the country's state-run channel posted the U.S. had been reaching out to China seeking to negotiate on tariffs. So we got some news that got leaked. Can't confirm whether or not that's legit or not, but still very interesting. And the markets certainly recovered off of that. I mean, look, the markets are showing a lot of resilience right now, which is, if you're a bull, that's what you want to see. I mean, let's be honest, if you have a 401k account, that's what you want to see. And we're coming up to some key moving averages on the daily charts for the major ETFs. So like SPY, like Qs, right? So be curious to see where that goes the remainder of the week. Can we get above the 50-day moving average? I think that's the first thing that I'm looking at. That's going to be huge. Let's also take a look at some other things that kind of lifted the market today. You know what? Tech is still tech, folks. We had some big names reporting earnings today, one of which was Microsoft. Microsoft shares jump on earnings, revenue beat as Azure cloud business grows 33%. They delivered better than expected results on the top and bottom lines, which is awesome. Earnings per share, $3.46 versus $3.22 expected. That's a beat. Revenue, just over 70 billion versus 68 billion expected. That's also a beat. Microsoft's revenue grew 13% year over year in the quarter, which ended on March 31st. So this is great news for tech and definitely lifted the NASDAQ in after hours. But hey, that's not all. We also had Meta reporting earnings, and guess what they did? They also beat. Meta shares rise on stronger than expected revenue for the quarter. Meta shares rose more than 5% after the company reported stronger than expected revenue in the first quarter. And this one, earnings per share, $6.43 versus $5.28. That's a beat. Revenue, $42.31 billion versus $41.40 billion. That is also a beat. So we're starting to get a sneak peek into some of the big names, right? Meta, we're getting Microsoft, and here in a minute, we'll cover some of the other big names still to come this week. But as far as how, the Qs responded, I mean, my goodness. Well, first, let's take a look at Meta. Meta definitely got a nice little bounce based off that. And if we take a look at the charts here, again, for those on YouTube, massive move up after the bell for Meta, all the way up to 582 after closing the day at 549. So that's a massive pump, still holding up pretty well there. And let's just take a look at how Microsoft did based off their earnings. And oh boy, yeah, they are still climbing. Closed the day at 395, and currently in after hours, the stock is up to 427 with a high of 429, and at time of recording looks like it's about to break that as well. So great to see some of the Magnificent Seven, reporting good earnings. And here's the thing too that you have to keep in mind. One of the things that I guess the bear camp would say about earnings that we've seen so far from various companies is, hey, they're all, just simply pulling their guidance, right? As far as what these companies are reporting, the numbers might be good, but when Wall Street's like, hey, what are you going to give us for, the rest of the year? A lot of these companies are saying, hey, not so fast. We got a lot of uncertainty right now in the market with tariffs and just the economic landscape. We're going to pull our guidance. We're going to wait to see how some of this shakes out. Well, the interesting thing is Meta did not pull their guidance. They actually came out with their guidance, which, the market took as a positive sign. So I thought that was very interesting that when you have a sea of companies pulling guidance because of tariffs, because of the uncertainty, taking more of a conservative approach, you got Mark Zuckerberg and Meta saying, hey, you know what? We will give the market guidance. And that is a massive, massive boost, I believe, for the overall stock market. Meta is a major, major component of that, being one of the Magnificent Seven. So that is great to see. I'll be curious to see in the morning if these two tech stocks, hold up as far as the gains that they're experiencing now. But honestly, I don't really see a reason why they wouldn't. And that kind of leads me into my next piece here. Let's do a quick check on the economic calendar to see if there is anything coming out tomorrow that might disrupt this bullish run on tech currently that we're seeing. As far as tomorrow, 8:30 a.m., you got continuing jobless claims coming out. You got the Dallas Fed PCE. Nothing too volatile, I would say, except for you got ISM manufacturing PMI coming out. And for those who, may not know what that is, basically what we're going to be taking a look at when it comes to ISM manufacturing prices. Basically, it's a composite index based on the seasonally adjusted diffusion indices. That's a lot of words. For 5 of the indicators with varying weights: new orders, production, employment, supplier deliveries, and inventories, right? So it's basically just going to be a key component that the market will be looking at. It's based on data compiled from monthly replies to questions asked of purchasing and supply executives in over 400 industrial companies. And so it does come out tomorrow, and it is typically one of the more volatile reports. The previous number that we hit for that in particular was 69.4. The forecast is 72.9. So we'll see where that comes in. But overall, not a ton coming out tomorrow beyond that. As far as Friday, May 2nd, We do have unemployment rate for April coming out at 8:30 a.m. Previous was 4.2%, and that is the consensus. What will come out on Friday is also 4.2. So I don't see a lot in the way of, economic data to disrupt some of this bullish, this bullish reprieve that we're seeing, also being fueled by tech earnings. And not to mention the fact that we have some more earnings coming out tomorrow, some more big names that could also add fuel to the fire. Most notably would be Apple. So Apple is going to report tomorrow after the bell, I should say, at 4 p.m. Obviously, Apple is one of the largest companies in the stock market, definitely worth paying attention to. Want to see if they can beat, right? Like Microsoft, like Meta. My guess is I'm going to go out on a limb and say that they do beat, or at the very least, they meet Wall Street expectations. And I think the reason for that is because we're seeing a precursor to that, I think, as far as tech goes, just based off of Microsoft and Meta. Now, look, if they had come out today and reported horrible earnings, I wouldn't feel as confident about Apple. But given what we're seeing there, I would expect Apple to kind of follow suit to some degree, but, we'll see. Some other notable earnings to pay attention to on Thursday. We're going to get Pfizer set to report Q1 reports with analysts watching for updates on COVID-19 vaccine sales, recent FDA applications. As far as the consumer, keep in mind, right? The consumer drives a big portion of the market, and we are going to get a nice glimpse into how the consumer is responding to this current uncertainty around tariffs and other things. We're going to get Visa, we're going to get MasterCard, and we're going to get PayPal. So that's huge. They're releasing earnings, massive financial firms, of course, and they're going to provide insights into consumer spending. So definitely want to pay attention to that. We did see reports from American Express in the previous week, and based off of what they said, they were like, hey, consumers fine, they're spending. So I'll be curious to see if Visa, MasterCard, and PayPal report similar findings. ExxonMobil and Chevron also going to report tomorrow. Major U.S. oil producers, of course. So given some of the fluctuations in energy prices, I'll be curious to see how that looks. And then Friday, to wrap up the week, we get Nike, we get Monster, beverages, that is, and then Fortinet. So Nike is going to be an interesting one in the apparel sector. This will be a insight into consumer demand to see how things are looking there. So that is your earnings update for the remainder of the week. And let's do a quick check-in on the trade war. So as I mentioned earlier, there's some leaks coming out that, the U.S. is reaching out to China. But you know what? That did come from a China source. So I don't know how much you can actually trust that. Is it true? Is it not true? President Trump had his cabinet meeting for all the nation to see today, and didn't really shed a whole lot of light on the current situation with tariffs. I think we're still in a waiting season, I guess you could say. Supposedly India may be the first big deal that we sign. But again, I think right now cares about, according to Yahoo Finance, China eases tariffs on select U.S. goods as Trump says Beijing will eat the costs. Interesting. On Wednesday, Reuters reported that China had quietly compiled a list of U.S.-made goods exempt from its 125% tariffs, aiming to ease trade tensions without public concessions. The list appears to be expanding. For instance, China recently waived tariffs on U.S. ethane imports. This approach allows Beijing to maintain a firm public stance while offering behind-the-scenes relief. So that's interesting. So behind the scenes, China's, trying to soften things, but they are, still trying to, I guess, sound tough and say, hey, Trump, it's on you, U.S., to make a move. But that is interesting that Yahoo Finance is saying behind the scenes, China's kind of doing some things there to kind of soften things, I guess. So basically, China has quietly rolled back tariffs on some U.S. Semiconductor products, easing pressure on its tech sector. Meanwhile, President Trump defended the 145% tariffs on Chinese imports, saying China deserves it. That is, I don't know why I think that's funny, but China deserves it, and would likely eat the cost to shield U.S. consumers. He did acknowledge Wednesday, however, the possibility of supply shortages and higher prices for consumers. There really isn't anything to say, I guess. China's doing some stuff behind the scenes. We just need both these parties to come to the table and get a deal done, and I think that would be fantastic for the overall market itself. So we'll see what happens. As of right now, there doesn't really seem to be any kind of deal on the table with China. We had reports earlier in the week saying that China was essentially calling the U.S. a liar, saying that, hey, we haven't talked to them, but now they are. So it's very confusing. And I definitely understand why a lot of companies are kind of hesitant to give guidance, because we don't have a lot of clarity on the situation yet. But as of right now, it seems like the first deal that may come through is going to be India. But keep in mind, we have all these countries that are supposedly at the table, but we don't have any deals inked yet. And that's really what the market needs, to have some assurance. The market does not like uncertainty. So that's kind of where we're at there. What is interesting is the VIX is coming back down, which is good. It closed today at 24.70, so that is good to see the VIX below 30, maybe stabilizing a bit. Let's see if big tech earnings can give this market a lift. Let's see if we can get above some key levels. As far as the Qs I mentioned earlier, getting a lift from companies like Meta, Microsoft reporting earnings. I took a position in Qs. I bought some calls on it. Very short term, expiring on Friday, but I'm expecting personally a bit of continuation. I really, really liked how the market was able to recover after being down over 2% this morning right out the gate in the first half hour. I think it showed a lot of resilience, and I think we're going to continue to see some buying pressure, some bullish upward movement tomorrow. So drop a comment. Let me know what your trades are, what you're looking at. Keep in mind that we are starting our investing series, The Intelligent Investor, written by Benjamin Graham, the father of value investing, for all those who are interested in some longer term investing strategies. I'm going to be breaking down Benjamin Graham's book, which is the foundation, the bedrock for Warren Buffett. So, hey, if you want to learn what Warren Buffett learned and turned him into arguably one of the greatest investors of all time, tune in this weekend. I'll be posting that. It'll be a 4-part mini series, and we'll kick off this Saturday by breaking down, Benjamin Graham and who he was. So, looking forward to that. Please leave a comment. Let me know what you want to see, what you want us to bring to the table here on Stockcast, any stock breakdowns that you want to do. Don't forget to like and subscribe. Appreciate the support. And as always, folks, remember, plan the trade and trade the plan. Have a good night.